Ladies and gentlemen, good day and welcome to the Greenlam Industries Limited Q3 and 9M FY23 conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Saurabh Mittal from Greenlam Industries. Thank you, and over to you, Mr. Mittal.
Thank you. Good afternoon, friends, and welcome to the Greenlam Industries call. I'll give you a brief update of what's happened on the business, and then Ashok will take you through the financial details. I'm sure by this time you've seen the presentations on the website and the investor presentation too. So on the business front, as you saw, Q3 we grew the business by about 12% in top line. The domestic business grew about 13.5%, and the export business grew about 10 to 11%. The gross margin of the business improved to about 48%, but we had slightly higher operating costs in Q3, mainly on account of manpower, on hiring additional teams for the new business. We also had the full cost of the Gujarat plant, so I think this all contributed to higher operating costs, thereby not showing a significant improvement on the EBITDA front. The working capital management was well in control. We improved working capital year on year by 8 to 10 days, and we also improved working capital on a Q-on-Q basis by about 1 odd days. We continue our focus on the domestic and export businesses on driving more market share in both the geographies. The challenges we had in certain markets in the international space is more or less settled now, and we are seeing business coming back from those markets. Even from the Western markets of Europe and US, while people are talking about a little bit of a slowdown, but we think in the coming quarters, our numbers should look reasonably good in those markets too. As far as the new projects are concerned, the Gujarat factory's third production line will be operational in Q4 of FY23. The plywood plant at Tamil Nadu should be operational by the end of Q4 of FY23. The Andhra Pradesh part should start in Q1 of FY24, and the particle board plant should start by Q4 of FY24. So we are having a close watch on the projects. The execution is more or less going on schedule. The teams at the manufacturing plants are also by and large in place, and the teams for sales marketing on the ply piece is WIP as we talk. So by and large, things look to be within our control, and we are driving for successful execution of these projects. And we hope the business, as we move forward now, each quarter we think there should be improvement in terms of revenues and profitability. So that's it from my side at the moment. Ashok will take you through the financial highlights, post which I'm available. The team is available for any queries of yours. Ashok, over to you.
Good evening, friends. I'll take you through the financial performance. For Q3 FY20 on a consolidated basis, net revenue for the quarter grew by 12% on a year-on-year basis and degrew by 2.8% on a sequential basis and stood at 503 crores. The gross margin grew by 400 basis points to 48.3% in Q3 FY23 from 44.3% in Q3 FY22. On a sequential basis, gross margin grew by 370 basis points. Gross margin in absolute terms grew by 22.1% on YOY basis and 5.4% on sequential basis to 243 crores this quarter. EBITDA margin was down by 100 basis points to 10.9% this quarter as compared to 11.9% in Q3 FY22. On a sequential basis, EBITDA margin was up by 50 basis points. EBITDA in absolute terms grew by 2.7% on YOY basis and 2% on sequential basis and stood at 54.8 crore in Q3 this year. Net profit for the quarter stood at 28.2 crore as against 26.9 crore in Q3 FY23. Moving on to 9-month performance, consolidated net revenue for the 9 months grew by 20.3% on YOY basis to 1,492 crore as against 1,240 crore in 9 months last year. Gross margin was up by 150 basis points to 46% this year from 44.5% in last year in 9 months. Gross margin in absolute terms grew by 24.5% to 686 crore as compared to 551 crore in 9 months last year. EBITDA margin was down by 50 basis points at 10.6% this year from 11.1% in 9 months last year. EBITDA in absolute terms grew by 15.5% to 158.8 crore as compared to 137.5 crore in 9 months last year. Net profit grew by 26% to 81.9 crore as against 64.9 crore in 9 months last year. Now I move on to segmental performance. Laminate revenue in Q3 FY23 grew by 12.5% on year-on-year basis and degrew by 2.6% on a sequential basis and stood at 459 crore in this quarter. Volume growth stood at 7.1% on year-on-year basis. Domestic laminate revenue grew by 13.3% on YOY basis and degrew by 0.8% on a sequential basis. Volume growth stood at 19.1% on a year-on-year basis. International laminate revenue grew by 11.7% on year-on-year and degrew by 4.4% on sequential basis. In value terms, volume degrew by 6.8% on year-on-year basis. EBITDA margin stood at 12.4%, a degrowth of 90 basis points on year-on-year basis, a growth of 30 basis points on sequential basis. Production volume were at 4.34 million sheets and utilization level were at 91%. This after taking into account the Transi's capacity addition. Sales volume for the quarter stood at 4.26 million sheets. Our average realization for the quarter was at 1,030 per sheet. Moving on to 9-month performance for laminate. Revenue grew by 20.2% on year-on-year basis to 1,360 crore as compared to 1,132 crore in 9 months last year. However, volume degrew by 1.6% on year-on-year basis. Domestic laminate revenue grew by 30.9% in value terms on year-on-year basis and volume growth stood at 10.8% for the period. International laminate revenue grew by 11% in value terms but the volume degrew by 13.5% on year-on-year basis. EBITDA margin stood at 12.2%, a degrowth of 40 basis points in comparison to previous year. Production volume were at 12.85 million sheets and at a utilization level of 99%. Sales volume for 9 months stood at 12.38 million sheets and our average realization for 9 months was at 1,048 per sheet. Now I'll move on to veneer and allied segment, which consists of decorative veneer, engineered floors and engineered doors. In decorative veneer segment, revenue remained flattish on YOY basis and degrew on sequential basis to 24.5 crore this quarter. Volume degrew by 22% on year-on-year basis. Revenue of decorative veneer business grew by 28.8% on year-on-year basis to 79.4 crore in 9 months from 61.7 crore in 9 months last year. Volume grew by 10.3% on year-on-year basis. Sales volume for the Q3 FY23 stood at 0.23 million square meter and for 9 months it stood at 0.92 million square meter. Capacity utilization for the quarter was 26% and for 9 months it was 29%. Average realization for the quarter was 1042 per square meter and for 9 months it was 862 rupees per square meter. Moving on to engineered wood flooring, revenue of the flooring business grew by 1.3% on YOY basis and de-grew by 7.6% on sequential basis to 10.9 crores this quarter. Revenue in 9 months grew by 30.6% on year-on-year basis to 34.2 crores as against 26.2 crores in 9 months last year. Capacity utilization was 11% in the quarter and 12% for the 9 months. Moving on to engineered doors. Revenue for the business grew by 37% on year-on-year basis and grew by 68.8% on a sequential basis to 9 crore in this quarter. Revenue for the 9 months de-grew by 9.9% on year-on-year basis and stood at 17.9 crore as against 19.8 crore in 9 months last year. Capacity utilization for the quarter was 21% and for the 9 months stood at 15%. Net debt for the quarter ended 31st December was 147 crore as against 75 crore at the end of last quarter. Increase in debt is primarily on account of debt raised for our new projects. Net working capital for the quarter stood at 68 days and for the 9 months stood at 69 days. That's all from our side. Now I'd like to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, to ask a question, you may enter star and 1. We'll wait for a moment while the question queue assembles. The first question is from the line of Udit Kajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. Thank you for taking up my question. 2 parts. You earlier mentioned today on interview that the growth for 23 could be close to 22% for the full year. So what are the projections for Q4? And can you throw similar light for 24 growth and margins?
Udit, for this whole year, we are expecting in the growth in the range of around 20%. So you can say that for the Q4, in the range of around 550 crore. That's which it looks as of now.
Is there any projections for 24 on top line and margins?
Margin will be similar to the current month margin, current quarter margin, which is in the range.
This is 23, right? That was it.
You asked for this year or yeah, 23.
Okay, and sir, I'm asking also for 24 if we have any internal projections or any guidance that management wants to do.
So 24 revenue should be like a 20-25% growth.
And margin will be difficult to say as of now because we are starting 2 new projects. So.
Okay. And just similarly, can you give volumes for the doors and the engineers for the quarter?
I think that we will.
So this was overall margins, not specific to laminate or veneer division. This was overall consolidated margins and top line growth.
Yeah, that is clear. That's clear. And just volume front, if you can share the wood flooring and the doors for the quarter.
We can share that offline.
Sure, sir. I'll come back with that.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Funds. Please go ahead.
Yeah, hi, sir. Am I audible? Hello?
Yes, that's a bit
Yes,
clear.
you are.
Yeah. Yeah, hi, sir. Thanks for the opportunity. So just a couple of questions in terms of the export volumes. They seemed a little muted, but all the, freight-related costs have eased off and other things have, come down. So how should one expect the export volumes from here on, in terms of improvement?
So export volume should come back, we think, from Q4 onwards, right?
Okay.
And so if you see export of Q3, we have the volume has gone down by about 7%. The value is up by about 13.5%, 14%. But I think as we move back, we should kind of get normalized, and both volume and value should start looking up.
Okay. And so this value thing which you spoke about, because you rightly mentioned the realization has gone up. So is it that you are now getting a better product mix? How should we look at it going forward for the export market?
Yes, so certain export markets like which have come back now, and maybe towards the second half of the Q3. So those are more volume markets. So because the denominator has changed, the realization is looking better. While it's a constant endeavor to keep driving improved value mix in certain markets. So I think it's more of the denominator. As the volumes go up, probably the realizations will kind of settle down a bit. So I think that's how you should look at this.
Okay. Thanks. And sir, in this quarter, your gross margins have recovered very sharply. You think from here on there's further scope of this gross margin improvement from here on?
We don't think so, because post that some cost increases will happen, although very minor in chemicals and craft paper. So I don't think a significant change will happen. So there could be some basis point movements here and there. But I don't think any significant movements will happen from here, at least in this quarter.
Okay. And so just one last question in terms of the domestic laminates. How is the volume traction there? You've seen a good growth, but there's also will be the Gujarat plant element over there. So how should one look at the domestic demand traction? Because in some of the other building material categories, we are seeing a slackness as far as the demand growth is concerned. So just your thoughts on the domestic laminates market. Thanks.
The domestic market, year on year, there's been about 19% volume growth, and Q on Q has been about 10% volume growth. So in domestic, as you rightly mentioned, with the Gujarat plant, we've also entered the commodity segment, the lower end of the market segment. They were not present. So those volumes are getting added to the to the revenues and to the volumes. So while volume growth is 19%, the realization has dipped by about 6%. And even if you see Q2 sequential basis, volume has grown, but realization has come down. So I think the volumes will keep inching up, right? And the mix, although will keep pushing up the other premium segment also. We don't see much improvement on the realization front on the domestic market now. Yeah. But I think volume should keep inching up as we move ahead.
Okay. And so the competitive intensity in domestic market, any meaningful change, or is it stable?
It's always been competitive, so I don't know if it's got any worse or better. But laminates, as you know, the installed capacity is more than the demand, which is not unusual in our category. It's always been that way for ever since I've known. So the supply is always more than demand. So clearly, but just by creating capacities, you can't sell to. We need a lot of marketing, distribution, specification work to be done. So I think it remains the way it is.
Okay, sir. Thank you so much and wish you all the best. Thank you so much.
Thank you. The next question is from the line of Abhishek Ketam from Alpha Invesco. Please go ahead.
Yeah, thanks for the opportunity. So I wanted to know, for our particle board plant and plywood plant, what will be our sort of procurement of timber strategy, or are we planning for our own plantations?
So for both the plants, the raw material for plywood would be plantation wood and the face veneer, you either import or you buy of traders who stock imported face veneer. For particle boards will again be waste wood, plantation wood, any form of wood chips available, sawmill waste. So this will be the format. So we are not planning our own plantation as we talk, but that is something we are actively discussing internally of not having our own plantations, but working with local farmers and encouraging them to plant more of these species, high-yielding species. That's something which we are actively discussing, but we are not looking at doing our own plantation. It's more working with the farmers, encouraging them to plant.
Understood. And just one more question. So on smaller categories like 1.25 mm laminate or acrylic sheet. So markets are sort of expanding also there in Tier 1, Tier 2. So do we think we sort of expand in that areas or not going to go back?
Can you please repeat your question, please? I didn't follow.
Yeah. So
are you talking about us getting into acrylic sheets?
Yeah, acrylic and 1.25 mm sheets of laminate.
So acrylic is something which we are not at the moment considering. 1.25 is just like a brand extension or a category extension. You don't need anything special to do that. It's just more of getting the distribution set up to stock that category. But at the moment, there is no plan to do that. Okay.
So, but if we want to do 1.25 mm, can we repurpose our existing lines, or is there a specific?
Same line.
Same line.
Do 1.5, it's just a thicker laminate. It can all be done in existing lines. We don't need any fresh investments in terms of equipment or handling materials or raw materials for that matter.
Okay. So that's not a big concern. But acrylic, we don't see a big market right now. Or it's sort of extension to laminates, right? Same distribution channels.
It depends, So not necessarily distribution. Maybe the end channel, which is the channel partner dealer, probably could be common. But it depends on what you mean by acrylic. There are different products with acrylic resins. There are acrylic sheets. There's acrylic solid surface. There are different kinds of products. So that's what we are looking at. So our expansion right now is more on the plywood, pre-lam particle board, in that space. And within laminates, obviously, they're continuously innovating on range and new launches, etc. So acrylic is something we're not considering at the moment.
Okay. Thank you, sir.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Amit Agarwal from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity. So I wanted to understand on your branding strategy for the upcoming plywood segment, sir.
So we are getting it ready. I will not be able to talk much about it at the moment. So the team is actively working on it.
Okay. And so secondly, on the deco veneer business, what are we thinking about the business, or how are we thinking to take it up on terms of profitability?
So we're not too far from profitability, but I think we're not getting the revenues right. So like in Q3, in flooring, we're nearly at EBITDA break-even. In doors also we're nearly at EBITDA break-even, but the veneer business, we had raw material cost issues in veneer where we were importing the base ply and the veneers. We increased some prices. So the license improved, the volumes fell down. So it's more like a borderline case of just turning around the corner. So it's not so far. So the EBITDA loss in Q3 cumulatively is like 1.6 crores. So I think we just get around the corner with some RM cost softening and some more sales push. We should be there.
So this can be expected in post second half of 24, to or maybe FY25.
I'm not giving it time, and it's just around the corner types, It's not happened.
Okay. Sure. And so lastly on the pricing action, wanted to understand, what was for the laminate segment per se, what was the pricing action that we took in 3Q, and are we expecting anything in current quarter?
So there were no price increases in Q3, and we are not envisaging any further price increases. In some categories, there could be a slight correction rather, but no increases clearly.
Thank you. Thank you for your answer, sir. That will be it from my side.
Thank you. The next question is from the line of Alisha Mawla from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. So my first question is with respect to volumes. 9 months we've not, 9 months YOY we've not seen any significant volume growth. In fact, there's a slight degrowth. You did mention that export service volume degrowth, but on the domestic side also, are we growing at a pace slower than the industry?
9 months.
Alisha, there was a growth of around 11% in domestic in terms of that. You don't think that market is growing more than that in terms of that? This is coming on top of the previous year growth in terms of that, which was like last year the growth was 33% overall. So we believe that 11% growth, yeah, this could have been higher, but in our opinion, it is more than the industry growth.
And 11% you're saying is the domestic volume growth?
Yeah.
See, 11% volume growth and about 17% realization.
Okay. And so while volume growth for the current year may look slightly limited, but for FY24, because now we have Gujarat, we have the new capacity coming in Q1. Also, there are other players in the industry adding capacity. So how are we seeing the volume growth for us for the industry in the laminates segment for FY24?
Are you talking about our potential growth, or are you talking about industry growth?
Your growth, and also with respect to industry. Will it be in line with industry, or we are in a better position to outpace the industry growth on the domestic side?
I don't have exact details about what others are doing so much or the industry number in cumulative. But I think we should be able to do well over next year if you're talking about FY24, because the capacity expansions will kind of debottleneck certain segments of the products we do. So we do a bigger size laminate than the 6 feet by 12 feet line, where the capacities have been running choked. And with the new capacity, Andhra Pradesh will be more than doubling the capacity in that segment. We're also adding one line for the larger size of laminate, which serves certain European and other international markets and some other domestic market. The Gujarat plant will get fully operationalized by this quarter, which is also serving an independent segment of market. So I think the way the capacity expansion is happening, it's also serving certain strategic advantages in segments where we were, choked with capacity. So we think we should be able to have a decent quantity growth in the coming financial year.
Is it possible to give some direction or color on how much are we expecting this volume growth to be?
So if you see versus this year, I think if we add the full capacity of Gujarat and Andhra Pradesh, the capacity is expanding by nearly 40 to 50%. And I think probably we should be looking at a 12-15% kind of a volume growth, I guess, next year.
Oh. And our realizations have gone up sharply, and I do understand that a large part of it would have to do with RM inflation, which is now seeing some softness. So how much of this will be sticky, and how much of it is because of product mix?
Hard to give you a number, but I can say it's a mix of both price increases and product mix improvements for both international and the domestic market.
So for the longest time, we were doing about 750-800 crores kind of realization, 750-800 rupees realization, which now is closer to 1,000. All I'm trying to understand is how much of this 1,000 rupees is sticky.
How much of 1,000 rupees is?
Sticky. Will we go back to 750, or is that price now number going to be in between?
So if you look at the next year or so, both volume and value, both are, we'll be driving both volume and value. So one part of the expansion is happening in the volume segment. One part of the expansion is happening more in the value segment. So I would like to believe that we should be in a similar range in terms of price realizations. This is what I tend to believe. But there are also product launches.
Alicia?
Yeah, I'm done. Thank you.
Thank you. The next question is from the line of Mohit Agarwal from IIFL. Please go ahead.
Yeah, thanks. My first question is on, particle board segment. So have you seen an increase in imports of, bare particle boards? And has that impacted realizations and margins?
At the moment, since we are not into importing particle board, but we do believe certain imports from Southeast Asia have started coming in into South India. This is the feedback we have. And netting of currency depreciation and freight reduction, because there was no proper base of particle boards, bare boards in the country, because the plants were very small, so there is no direct comparison between what others were selling and what is coming in right now. But we do believe imports have started coming in.
Okay, but any sort of an approximation how much pricing would have been impacted in the last couple of quarters?
I'm not hands-on with that data, but I can say if you are trying to compare in relation to what we will do, our model is going to be largely laminated board basis, although we will produce plain boards, but largely it will be nearly all of particle boards get laminated and sold, and they don't get sold as bare board. But yes, if imports do come in at lower costs, there could be some impact on the laminated price, sales in the market.
Okay,
and how much
understood.
percent, I don't have an exact sense at the moment, but if they do come in, there will be some correction in the realizations of the product.
Sure. And my second question is, on the capex expansion, could you share how much of capex has been incurred so far and how much is pending?
This is, I believe you are asking more in terms of the project, new project.
Yeah, the new projects, yes.
Yeah. So as on 31st December, we have spent close to around 325 crore on both the projects, which is plywood and this laminate and particle board project. And out of which, as we have mentioned, that plywood is going to start in Q4 of this year, Q4 of FY23, and laminate in Q1 of FY24. So 325 of the total announcement of around 950,000 crore, 325 crore is the amount spent so far.
Okay. And how much do you expect to spend in next year? Well, largely the remaining would be spent in next year, right?
No, some amount may spill over into the FY25 also, but most part of it will be spent by end of next year.
Okay. Thanks a lot. That's all from my side.
Thank you. The next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Yeah, hi, sir. Am I audible?
Yes, you are.
Yeah. Hi, sir. I had a very generic question. Sir, what do we see, which companies would we classify as our competition when it comes to the global laminates markets? So that's the first question. And the company has done phenomenally well in the past. What would you attribute this to? Is it distribution, designs, distribution? How should one understand this, sir? Thank you.
So global competitors, if you will take global competitors would be Wilsonart, which is an American-based company, but now they got split into various regions, so that's another point. Then there would be Formica worldwide. There would be an Italian company called Abit Laminati. Then there will be regional players in Southeast Asia, South America, in UK, in Europe. So there will be then more regional players across various parts of the world. So that's on the global competition. And the next question was regarding what would you attribute to? I think it would be Sorry, please go ahead.
Yes. So we have done pretty well on the export side. What would you attribute that to, or what is it that sets us apart versus the peer side? Is it design, sizes, cost? How should one understand that?
Everything we've still not done very well, but thank you for the compliment. I guess it's a mix of everything, right from manufacturing, right product quality, supply chain, sales teams in the market, in the international market, working with channel partners, architects, IDs, design. I think every single piece and the attention and focus to build a brand, I think will be probably bits and pieces of lot of small and large things, and not just one particular part of the business.
Right. Sir, I'll just rephrase the question. I'll put it the other way around. What would be the entry barriers, say, if one has no cap on land, labor, and capital, then what is it that would be an entry barrier for somebody to make a dent in those markets?
Entry barrier would be the brand, the distribution network, with the specification with architects, interior designers, engagement with the furniture manufacturers. So it'll be more on the sales, marketing, distribution piece as an entry barrier.
Sure. Sir, would it be possible for you to detail something on that side, specifically on the distribution side, or how we are engaging with the end market, specifically on the exports, and if you can indicate which are the key regions, say, which constitute like 60% of our export revenues? That would be great, sir.
So I think it's going to be a longish conversation. Maybe we can set up a time with Ashok and Samarth can take you through the geographies and the key markets, distinguishing factor and all that stuff. Ashok, maybe you can take.
Sure. And my second question was, sir, how do you see the evolution of the company? We understand that the company is getting into different categories. So what is the thought process behind it? Is it more bundling, or is it the limitation on growth that we see in as a segment which actually forced us to dive into other wood categories? So, sir, how does this fit into your overall vision, say, 5 years, 10 years out?
So in our next topic presentation, we have said that besides, along with surfacing products in our category, we also want to get into substrate products. So again, two parts to it. The international business is going to be still largely only laminates by and large, right? If you look at the domestic piece, because there's a lot of channel overlap in terms of architects, IDs, homeowners, specifiers, dealers, distributors. So we need to have more products in the same channel. And so every category has their own strategy. So if you wire particle boards, because you're able to match the decor paper with particle boards with laminates, with compact laminates, you're able to offer a complete solution to customers. Wire plywood veneers, flooring doors, all go in similar residential segment. So I think in the domestic space, the strategy is to be across the wood panel segment because of the channel overlap and customer being common. In the international market, it's going to be largely laminates only. The wood products are more of a domestic story rather than exports. Yeah. So your next question was limitation of growth. So really, there's no limitation of growth in laminates, but you can't, at the scale size we've reached, the growth cannot be like more like a 12-15% quantity, 15-18% value, high quality growth. It will be a steady growth. So I think that was the idea behind adding plywood and particle boards. And this is not so uncommon. If you see globally also, laminate companies who have done well over several years also have steel and particle boards, steel and MDF. They have flooring in their business. So the whole wood panel segment eventually kind of merges with various products, and you go and offer the entire solution to customers.
Sir, I'll just squeeze in one question. You use the word to make good of the channel overlap. So possible to give some numbers over here if you're looking at a market sizing from a retail touchpoint standpoint, what percentage of our touchpoints would we will automatically be fungible for the new product categories that we are in? Because when we visit the marketplace, we see laminates is something which is very, very niche, and everything else is more commoditized, which has changed in recent years. Like to hear your thoughts and say that basically the perception is wrong, and basically when we get to the marketplace, bundling is something which is actually a proposition which is actually implementable.
So when I say channel overlap, the dealers are common for all categories. So dealers in our trade would carry plywood, MDF, particle boards, laminates, adhesives, hardware, maybe timber. So I meant by that. So clearly, so they are a common point to serve with the contractors, customers, and carpenters. So if you talk about what's fungible, so mathematically, all the channel of laminate probably also sells plywood, particle boards, and every category. But whether we appoint all of the dealers or not is a different matter. We still need to work with those dealers to sort our agreements out and work with those counters to sell our products. So mathematically, the counters who sell laminates also sell ply, also sell MDF, particle boards. They all sell most kind of wood product or wood panel products, along with some adhesive hardware. So that's how it works. As far as question about commoditization and specialization concerned, so yes. So in laminates, certain segment of the market is more design, brand, supply chain oriented. Some part of the laminate market is commoditized. In plywood also, plywood probably is more commodity than laminates. Greenlam particle board again has a design element to it. You have to go to architects to get the specification done. To work with the OEMs, those OEMs also buy laminates from us. So it's all kind of interrelated, and there's a significant amount of overlap through the entire value chain.
This is helpful. Sir, can I squeeze in one question, last one?
Sure, that's the last one, yeah.
Yeah, sir, last one. Sir, anything specific that we are doing on the technology side wherein it comes to, say, if I'm a carpenter and I'm very loyal to you on laminates and you want to push the other products as well. So is there something on the last mile loyalty technology that we are doing which will help us to cross-sell the product categories? Thanks.
Yes, that's right, yeah. Yeah.
Sure. This is helpful. Thank you so much, sir.
Thank you. The next question is from the line of Jaidesh Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. So my first question is with regards to the newer segment that we are entering. So what kind of utilization levels are we targeting for the initial level, the target micro market that we want to enter, and the pricing strategy? Will it be at a discount or at par with the market leader? So that would be my first question.
So on the pricing, we're still working out on what the strategy will be. So won't be able to answer much on that. But clearly the products will do, obviously, as you know, is all in-house manufactured. It'll be at the bit more premium end of the market, alongside the other national brands. So exact pricing strategy is something we're working on. And what was your first question, please?
In terms of capacity utilization? Yeah, in terms of capacity utilization, we are looking at around 50 to 60% in the first year of operation for the laminate and plywood both. And in second to third year, we are looking at nearly around the optimum utilization of it.
And any specific micro market will be entering first, or it will pan India from the beginning?
So we are not looking at doing a pan India operation from the Tamil Nadu plant. Exactly that we're working on. It will be limited to a certain region of the country from a logistics trade point. It will be more like circling certain parts of the market and focusing on that with this factory.
Understood, sir. So second question would be regarding the employee cost. Like we have added a certain sales force. So at what pace will be expanding our sales force? Just to understand at what rate can the employee cost grow going forward, and what would be the impact on the margins?
So like I said in the remarks, we have additional employee costs for the Gujarat plant, and parts of it is not yet operationalized, which will happen in this quarter. We've already started building the team for the plywood sales, So I believe most of the team members will come on board within this quarter. Post that, we think not significant increase on that front will happen in the coming year on account of plywoods. We will start building the teams for particle boards in the next financial year. So probably there we'll have people and no sales for a certain period. So that's on how the people story will look like. As far as the costs are concerned, I think with revenues rising, the cost should get normalized over the next maybe 2 quarters or something of that sort.
That's helpful. And sir, my last question, if you can help with the geographical sales mix, how much of your laminate sales currently will come from East, West, North and South regions?
I think maybe
we'll touch base this on a one-on-one basis.
Yeah, no problem, sir. Thank you so much and all the best for the future.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. So apologies for any repeat questions since I missed the beginning of half. So I just wanted to know, how has the international demand been, and what volume and value contribution was there in Q3 versus what it was in FY22?
Demand. Yes. So demand, if you look at the numbers of international business, 9 months to 9 months, our revenues are up by about 9%. So 9%, that's right, in laminates overall. So demand has been pretty okay in certain markets. Certain markets, we've announced this earlier, we struggled in Q2 and part of Q3. Where there were currency problems. And as we talk right now, it's more like a mixed bag. Some markets are doing well, some have a little bit of challenge, which is usual. So I think we haven't seen any significant challenges besides what we saw already earlier in Q2 and part of Q3.
And to answer your next question, in terms of contribution, the international market has contributed around 45% in terms of value and around 45% in terms of laminate in volume.
So this was in Q3, right?
This was for the 9 months. It is 45% the value.
Okay, and what was the number in FY22?
Yeah, interesting. It was about 50-odd%.
Okay, got it, sir. And so the drop in realizations quarter on quarter, so is it largely because of, sir, is it because of the product mix or anything, any other reason?
It's a mix of both. Actually, the last year we did increase the prices because of the raw material inflation, and so in this year we didn't do any price increase. So it is a mix of both the price increase which we did last year and improvement in the value mix.
Yeah. So answering your question of freight, so freight is not included in the prices. So all additional freight which came in the international market was charged as a surcharge into the customer, and with reduction has been passed on to the customer as a benefit. So we agreed on a baseline with customers, on a pre-COVID cost, and post that whatever increases came in was a separate line item as a surcharge, and with reduction now, so that's a right back they're getting. So we're not charging them any surcharge or charging them reduced surcharge. This is the agreed baseline. So that's what we did. So that's not forming part of the price. The price is a function of price increases and value mix.
Okay, great. And so just one last question. This is on the particle board market in India. So you said earlier that imports are happening in the particle board segment. So what percentage of the market would be that? Out of I believe the market size in India is around 3,000 crores currently. So what percentage of the imports are taking place out of that?
According to our estimates, the market size is approximately around 5,000 crore. Whatever data which is available in the public domain from the government side, it was somewhere around last year. It was somewhere around 15 to 17% was the import. Even though earlier than that it used to be higher, but last year it was like 17-18% the import was there, approximately.
Okay, but like you as a company, Greenlam is not much concerned about these imports because these are the lower quality products, right?
So these are not the lower quality product, but these are the bare board which are mostly imported, and our focus will be on the pre-lam particle board.
Okay, okay. Got it, sir. Thank you so much. That's it from me.
Thank you. The next question is from the line of Rahul Pecha from Multi-Act PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I had a broad question on the export market. So wanted to understand what are the key drivers of demand in that market. Is it cost competitiveness? As a country, we are more competitive right now, and so that is why the demand has been there over the last few years, or there has been any other country which used to earlier export a lot and that has kind of vacated the market, or any other similar kind of trends that are playing out in the export segment.
So Rahul, it's a mix of it's a piece of everything. There's no one single element which goes into this. So our sustainability on the export market is not necessarily on cost-efficient manufacturing only. It's also a lot on marketing, distribution. Our sales teams in various international markets represented through subsidiaries and few directly, working in the market towards demand creation with architects, IDs, joineries, cabinet companies, OEMs, kitchen producers, etc. So I think it's a mix of everything. What's happened over the last several years, one could say that international competitors or several laminate companies who are having manufacturing abroad have not necessarily added any meaningful capacity. So a lot of growth of the market, probably came to us. That could be one way to put it. But this depends on geography to geography. Yeah. So has someone gone out of business? So yes, maybe one or two companies have gone out of business, but not that they were very significant in the whole, scheme of things.
Okay. And so, sir, within exports, our business is largely on our own brand, or are we doing any white labeling kind of?
So most of it is on our own brand. So we don't outsource. We don't do. We don't work for some other brand. We used to have several decades, like a decade and a half back. But now it's all our own Greenlam flagship brand and our sub brands. It's with our own brands.
Okay. Got it. Thank you.
Thank you. The next question is from the line of Udit Kajiwala from Yes Securities. Please go ahead.
Yeah. Thank you for the opportunity again, sir. Just wanted to check that you mentioned that we might have to take price correction in few pockets for laminate. Is it only because of the RM cost which is coming down? And secondly, on the blended basis, do we see further contraction because our new unit of Gujarat is more towards the mass market product? So would that impact the blended realizations and the margin?
So while the Gujarat will be on the mass market, the Naidupeta plant is actually on the opposite spectrum, where we have the larger size laminates and more value items are going to be produced there. So I think eventually there will be a set-off as far as the per sheet, per board realization is concerned. It could be a month or a quarter here and there, but by and large, we are driving both volume and the value mix. So I think probably it kind of gets set off. On the prices, I said, in certain segments, there could be a minor correction. I just said that. So yes, there could be some correction in certain segments of the market, but nothing very significant as we're in search right now.
Okay. And so just lastly, when you say value-added products, could you quantify that what would be the revenue mix of a total, and what are those margins of value-added products?
I can't do that right now with it.
Okay.
Individually, it will be difficult with also in terms of that to exactly pinpoint what is the margin difference.
Sure. Thank you so much.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Saurabh Mittal for closing comments.
Thank you, friends. Thank you for your time and attention and for your several intelligent questions. And Ashok and Samak are available for any further queries or questions to be responded. Ashok will kindly talk to the participants whom we agreed to do an offline conversation. And thank you once again. Have a great evening ahead.
Thank you. Thank you very much.
Thank you. On behalf of Greenlam Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.